Konnichiwa, and welcome to ESG Matters Japan. Tonight, we look at a policy shift that will affect how Japanese companies invest, compete, and communicate value. Japan's new GX emissions trading system launches in 2026, and it will become the country's primary mechanism for accelerating decarbonization. The question we're answering today is simple. How will the GX ETS impact corporate strategy in Japan? Let's break it down. Japan is moving into a new era where emitting carbon carries a real, rising price. Under the GX ETS, every ton of CO2 will have a market value, and that price will become a strategic factor, just like energy costs, labor, or materials. For many companies, this will change investment timing. A rising carbon price means the cost of doing nothing grows every year. That is why the GX ETS is expected to push companies toward earlier fuel switching, faster adoption of renewable power, and greater use of low-carbon feedstocks. The main driver is economic logic. Once the cost of buying emissions allowances exceeds the cost of transitioning energy systems, companies hit a tipping point. Waiting becomes more expensive than acting. But the story is not just about internal emissions. It is also about the products companies sell. Passing through carbon costs directly to consumers may not always be feasible, especially in competitive or regulated markets. So Japan is creating a new language of green value that allows companies to differentiate products on environmental performance. Three metrics will shape this shift. Carbon footprint of product, the total emissions across a product's life. Actual reduction amount, the verified reduction achieved inside a company's own operations. Contribution to reduction, emissions avoided downstream when customers use the company's more efficient products. These metrics will become crucial in global supply chains, where buyers increasingly demand verifiable data. From the First Movers Coalition to the EU's carbon border rules, procurement is shifting toward products that can prove their decarbonization claims. And then comes the biggest question. Where is Japan's carbon price heading? All signs point in one direction, upward. The GX ETS is built with price floors, ceilings, and government interventions that prevent crashes and gradually tighten supply. Japan is also considering allowing financial institutions into the market, which, in Europe, increase liquidity and influence prices. Externally, the world is converging on stronger carbon pricing. The EU's carbon border adjustment mechanism is forcing countries from China to Brazil to strengthen their own systems, so revenue stays at home instead of flowing to Brussels. That trend increases the pressure on Japan to keep pace. So the conclusion is clear. The GX ETS is not a symbolic policy. It is a structural shift in Japan's economic landscape. Companies that act early, by investing in low-carbon energy and communicating verifiable green value, will gain an edge. Those that delay will find the cost of emissions rising faster than expected, impacting margins and competitiveness. Japan's carbon market is about to become one of the country's key economic signals. And companies across every sector should start planning for that new reality now. This has been ESG Matters Japan. Stay tuned for more insights on how Asia Pacific is transforming the future of sustainability, technology, and markets.